What kind of shape are they in? What can we tell from the earnings that have come out so far, DBS and UOB?
Yeah, they've been very strong. The total income growth has been very strong on a year-on-year basis. The asset quality remains resilient. I think, as JP was said, the net interest income is a very important part of their total income. In fact, when you take the three, the net interest income makes up about a third of their total income. Now, what we're on track for, because we have OCBC reporting before the open tomorrow, we're actually on track for the three banks to report 9 consecutive quarters of quarter-on-quarter growth in net interest income. In fact, should OCBC report the same level of net interest income at least that they did in the third quarter, then you're going to see 7.9 billion of combined net interest income now of the three banks on a quarterly basis. Now you compare that to the last quarter of 2019 for a base, that was below 6 billion. So they've been growing that gradually, obviously with the higher outlook for interest rates. Last year a little bit more challenging though for the non-interest income front. On the non-interest income front, you have the market conditions that we've also faced at SGX. It has been a tougher environment, particularly in the second half of last year, and that's predominantly on the growth outlook and the outlook for increased interest rates.
Geoff, does it feel that we are close to hitting peak NIMs?
It did a month ago, but if you look at Fed Fund futures now, we're actually pricing in 75 basis point hikes from the Fed over the next 3 OFMC. So on 22nd of March, 3rd of May and 14th of June.
So that's 325 sounds like,
there's 325 is on the cards in terms of majority expectations.
Still some mileage in NIMs.
There is. And Piyush Gupta did allude to that in his analyst brief a couple of weeks ago. NPLs, you mentioned NPL for UOB. It actually was 1.7% for the first half of last year and came down to 1.6 for the second half of last year. So all three banks have NPL ratios less than 2%, which is a key threshold, that 2% threshold. OCBC, DBS, albeit closer to 1%. But this also hinges on global growth. And for China, albeit you've got great reopening momentum at the moment, you've still got two key downside risks for China. The first is the property market. It still has a lot of work to do, but also policymakers have flagged commitment to support. But you've also got, you've got that higher interest rate outlook because growth is more resilient than we thought in the US from a business activity and consumer perspective. But if global growth does actually come off and start to decelerate more as we thought it would, then you've also got that as a downside risk for China. And of course our banks, they're not just all generating their revenue here in Singapore. Between 50%, 60% thereabouts, at least a third of revenue for DBS it comes from outside Singapore. UOB reported this morning 57.5% of its total income was in Singapore. So the region's really super important as well.